Hey everyone, welcome to this week's stock and macro update. So this week I want to mainly focus on a few more companies in our Disruptors Index earnings reports for Q3. But first I want to get started with a portfolio update. So over the past week, the Disruptors Index is up about 3.9%, S&P 500 up about 4%, NASDAQ 6.67%, Russell 2000 up 2.96%, and ARKK, which is our growth stock proxies, up 11.2%. So a really, really good week for growth stocks. Unfortunately, our portfolio was dragged down a little bit by Bitcoin and Ethereum, which are both in there. The whole crypto market got leveled pretty bad in the middle of last week, and things have come back up a little bit, but really not enough to make any difference in our portfolio. So I did cover the whole FTX debacle last Friday. Every single day, new info is coming out, so it might already be outdated, some of the stuff in there, but I would still recommend checking that out because I give an overview of what exactly happened, what I'm watching for Bitcoin, as in terms of capitulation and possible bottom signal. So definitely be sure to check that out if you have not already. The top three performers, like I said, growth stocks have been on fire. So DocuSign in our portfolio up 21.27%, Teladoc Health, TDOC up 18.92%, Plug Power, tickers PLUG, up 15.49%. And then bottom three, yeah, Ethereum down 24.09%, Bitcoin down 21.9%, and Desktop Metals down 8.37%. They reported earnings. The market had a negative reaction to that. I'm going to get to that next week with our final earnings recap of the earnings season. So this week I'm going to go over PTC, Proto Labs, and Energy Fuels. And next week I'm going to go over Lemonade, Desktop Metals, as well as Plug Power and the Trade Desk. So starting with this week, PTC, a few highlights from that earnings report. The operating margin was up year over year from 24% to about 29%. So that's a big increase in their operating margin as they continue to transfer their business model from products to services. Obviously, services is a higher margin kind of business, and they are still at the forefront of helping companies get from everything from designing and testing products all the way through the product life cycle. So they are by far the leader in this industry, which is what we want. Industry leaders that are disrupting the status quo. PTC definitely fits that category. They've got big growth drivers. So a few of their business segments are their Arena product, which is product lifecycle management, ThingWorx, which is an IoT service, Onshape, which is computer-aided design, CAD, and 3D simulation, and then Vuforia, which is their AR product. So they've got some really cutting-edge tech, and again, that's what we want to look for with this Disruptors Index. These businesses that are driving the growth of PTC are either near profitability or already profitable, so that's good to see as well. Their Velocity segment, which is a couple of these products like Arena and Onshape, the revenue grew 29% year over year, and this quarter was actually fiscal quarter 4, so they wrapped up their fiscal year 2022, and yeah, that Velocity segment grew 29% from 2021, so that was really the biggest driver of growth. And they're expecting $560 million in free cash flow for 2023. So they are profitable, they have positive cash flow, they've got lots of cash and not much debt. And so, they've got the steady growth that we want to see, and really they're the complete package for a disruptor company. Proto Labs had $84.6 million in cash, no debt, $96.1 million in total liabilities. So that was great to see. They have one of the best balance sheets, I think, in the whole industry. They served 23,816 different customers in Q3, which was up by 366 over the past year. Their Hubs revenue growth, which is their main, their growth driver, was up 38.5% sales year over year, and the gross margin for Hubs was up to 26% from 17.2%. So Hubs is their global kind of partnership with hundreds of different kind of maintenance service people that can actually take the online orders from customers and create different 3D printed products with them. So really, if you're not familiar with Proto Labs, I did do an update on them back in one of the first editions of this newsletter back on Substack. So be sure to check that out as well. But really, they're the big e-commerce platform for 3D printing. So people can go on their website, order really any type of 3D printed product. They specialize obviously in customization, and the Hubs platform is what gives them kind of a huge network effect around the world. Like I said, this connects them with hundreds of different product managers that can help them create products for their customers. And so, yeah, that is the big driver of their growth, but the gross margin for that business is still up and coming. It's a very new business. They just bought it in 2021. So that's good to see that gross margin continue to improve. And this was also Proto Labs' fifth straight positive cash flow quarter. And if you own Proto Labs, or if you saw it after earnings, it was a huge disappointing market reaction to this earnings report. It's hard to tell whether or not that's going to be really short-lived. I'm talking about the next month or so. Is the stock going to rebound? Not sure about that, but my long-term, investment thesis in Proto Labs is still intact. They are the dominant force in this industry in terms of kind of an e-commerce platform to connect, customers that need 3D printed parts to the actual builders of those parts. And I don't see that slowing down anytime soon. The thing that's really holding them back at this point, well, there's two things. One of them is foreign currency impact. So the strong dollar, obviously, if you have business outside the U.S., it's going to hurt your business. It's going to hurt your, the dollar sales growth, because if you get paid in euros or yen or something like that, it wears on the valuation of those foreign currencies in terms of the dollar. So that was one of the big things that hurt PTC and Proto Labs, actually. PTC's earnings reaction was not nearly as bad. In fact, that stock actually made a 52-week high last week, so that's very good to see. Not seeing much of that in growth or really in the general market at this point, so good to see PTC's stock with that strength. But Proto Labs, yeah, the foreign currency impact was big, but also the fact that their injection molding business has been slower. This is their biggest business segment. It's kind of revolves around making kind of prototype parts that are not, end stage, high volume, 3D printed manufacturing parts. This business is particularly slow right now because so many companies have been ramping up their inventory. So they got a ton of orders in 2021, and now year over year, here we are a year later, those comps from a year ago are very high. So it's hard for them to really grow on that on a yearly basis at this point. Just because last year at this time they were getting all kinds of orders from medical products, from COVID-related products, and also from the auto industry, which has been slower recently as well because of the lack of demand for autos. So they are struggling in that regard, but I don't see that being like a lasting long-term issue. The market is very kind of wary to get into companies that are, even if they are normally high growth, if they're showing lower growth right now because of high comps year over year, I think the market is still very wary to get into these companies. But in the end, I think the balance sheet, the positive cash flows, and business segments of their business like Hubs that are growing not only their sales but also increasing their gross margins, I think that is still definitely a reason to hang on to Proto Labs. Lastly, Energy Fuels. Some highlights from their earnings report. So sales growth, I'm just going to mention it because the number is huge, but it's kind of good, but you got to take it with a grain of salt just because their sales are so low still. $2.9 million in sales for the quarter, which was up 480% year over year, because really they had nothing a year ago. It was still the heart of kind of the nuclear uranium bear market. We are finally starting to come out of that, so the year-over-year growth is going to be insane right now. But they also have $88.7 million in cash versus no debt, and they've got $19.2 million in total liabilities. So they've got over 4 times their liabilities in cash, which is great to see from a balance sheet perspective. They also said they plan to have 1 to 2 more facilities online, U.S.-based facilities, online in 2023, which is great. They're going to restart production within the United States. And United States is one of the best countries for uranium mining. We just haven't been taking advantage of that for years and years at this point. And Energy Fuels, I think, is one of the companies that is going to get this started back up again in terms of U.S. uranium production. They also are in the rare earth metals business. So with the success we've seen from MP Materials, another one of our disruptor companies, Energy Fuels is also going to benefit from that. We've seen MP Materials have huge success with rare earths, and that is finally starting to get some recognition from the government as well. So we should start to see some kind of government subsidies in this area too. Another highlight from Energy Fuels, they said that they have 760,000 pounds of uranium in their inventory, and they've got 3 million pounds worth of contracts in the books already. So they are pretty much guaranteed to have 3 million pounds worth of uranium in demand, and compared to that, 760,000, they've got a lot more to do, which means from here on out, for the foreseeable future, any uranium that they mine is pretty much as good as sold already. So the demand is there to keep their business growing, and those contracts could extend to up to 4.2 million pounds. So an extra 1.2 million pounds could be in Energy Fuels' future for sales. And those deals extend over the next 8 years. So they've got years and years of runway for demand, which is great because, again, as they continue to reopen facilities, it's pretty much guaranteed that they're going to sell whatever they mine. So a very, very good outlook for Energy Fuels in general. They also increased their guidance for 2022. This late in the year, that's impressive already. But they increased their outlook for uranium production from 110,000 pounds to 130,000 pounds. So increasing that by 18% when there's only a couple months left means that Q4 is probably going to be a great quarter for them. So very excited to see what they have to report for Q4. I also, in the Substack, went in a little bit to the S&P 500 earnings for Q3. Overall, not impressive. Analysts are finally starting to see that things are not going to be rosy over the next quarter to into next year. Their outlook now is negative for Q4. So this is a point where we can continue to see the shift of demand in the market from value stocks and blue chips and safety stocks and things like that into growth, which have healthy balance sheets. They don't have a ton of obligations for cash, and they have the growth there to sustain their business independently without looking to outside debt. So I went into the S&P earnings a little bit more in the Substack. I'm going to leave it there for this week in terms of the video, but just wanted to mainly give an outlook or a kind of a recap of Q3 earnings and outlook into what I see for the future for these companies. Again, next week I'm going to hit on earnings once again, and then after that we'll be back to kind of the normal Substacks where I go over one or two of the disruptors as well as some macro data for the week. So thank you so much for watching, and I will see you again on Friday with a crypto update.